Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor. And in today's video, we're talking about the September house price index from Halifax and how house prices have risen by 1.7%. Now, before we get into all the information, and trust me, I'm going to give you everything I possibly can from this, please give this video a big like. It helps me out with the algorithm. And if you haven't already subscribed, why not consider subscribing? Remember, the unique thing about this channel is we don't sell a course. There is no upsell for you. We're just trying to bring as much information to people as we possibly can, allowing you to make the best possible investment decisions that you can make. And as part of that, I'm being incredibly transparent about my journey in the properties that I own and the investments I own in my ISA and other things. So if you haven't already subscribed, please consider subscribing. Now guys, I want to go through the September house price index. So Nick, if you could put up the image I've just sent you over there somewhere, as you can see, there's some headline figures on there, and I really want to focus and nail into those very first of all. Now the first thing that we need to say is that the house price average in the UK now sits at 267,587. Now that is an all-time high. So the average UK house price has just risen and risen and risen this year. If you have a look at the historic data, again, Nick, I'll send you another image of some historic data. I think there's only been one drop of a very small amount, 1 month, but the average UK house price has just risen and risen and risen this year. And this month, no exception. Month on month, i.e. September versus August, we've got a 1.7% growth, and that compares to 0.7 last month and 0.4 the month before. So it really has accelerated. There's a lot of commentary in the comments of this and on the internet and other places about why this is happening. I'm going to run through some of those reasons down below and some of the things that I think that might be behind this. But I also think there's still a lot to go. I still think 267. I said this on my last video. With monetary policy so low, with interest rates at record low, that is still a very cheap mortgage for the average person. You know, a £230,000 mortgage at what, 1.5%? You're still talking 500 quid, maybe 600 quid a month. It's very, very affordable on a repayment basis. So I still think there's a lot to run on this, as long as interest rates stay low. And every indicator at the moment is suggesting that's going to happen. If you look at the long-term borrowing rates, if you look at short-term debt, everything says low for long. So for me, I think this is still low. I still think there's a lot to run in this. And also, as we said in our last video, the government are backing 95% mortgages. They're doing a 20% guarantee. It's not an equity stake in the property. So they're even telling us they're going to allow this to run a lot further. So for me, all the indicators are still good. Growth is still happening. I'm still investing. I'll tell you more about that in a minute. But for me, this is all good news. 1.7% up month on month. Now, I'm just going to narrow that down into some more information. For example, flats, they're only up 6.1% versus houses 8.9, and it was 8.8 for, I think, semi-detached and terrace, and 8.9 for detached. So in the same ballpark. But ultimately, this just shows the disparity as people have rushed to space. I also think this shows a little bit of number 5 on here, which is London, which is quite flat dominated, is only a 1% up year on year, but we'll come to that in a minute. Flats 6.1%, houses 8.9%, probably why I'm finding a lot of value at the moment in flats and why I've just bought a couple. I'll tell you more about that in a minute, as I said. So number 4 on my list is Wales. Wales is still the number 1 growth in the last year, 11.5% year on year. It's growing a little bit quicker than other regions of the UK. London is really the laggard though, and we're going to come on to that now. In fact, it's number 5. London only 1% up year on year. When you look at it regionally, a lot of the areas are like 8, 9, 10%. Wales slightly more, but London 1% growth, well below inflation. We're looking at London being a place where value at the moment, maybe London's starting to become a value proposition. For me, I'm starting to keep my eye on London. I'm interested. Number 6 on my list is the transactions. And I think this has something to do, when you look at 6 and 7, of why this house prices are continuing to rise, even with so much uncertainty in the market. And transactions quarter versus quarter, so Q on Q, June to August were down 11% on the previous quarter. And I think that's owing to 2 things. Number 1, there is a lot less properties for sale. And number 2, the stamp duty holiday came to an end. So this is from the HMRC. They're saying that quarter on quarter, June to August, transactions down 11%. The Royal Institute of Chartered Surveyors, the RICS, they've come back with the data that new instructions this month are down 37% year on year. Again, just owing to the fact that there's less stock for sale. And we're finding that ourselves when we're trying to find properties to buy. There's less for sale, prices are continuing to rise, and that is essentially how this is all playing out. It's a supply and demand thing. At the moment, it's far less supply than there is demand. It's very cheap in terms of monetary policy, affordability is there. There's lots and lots of tailwinds for the property market, in my opinion. Now, there are some headwinds, of course. There's a lot of uncertainty in the market. There's inflation worries. There's drags on incomes. There's lots of things to be worried about. But at the same time, the tailwinds, for me, they really do outweigh the headwinds. So I think there's still lots to run on this. I'm looking for 300,000 house price average, probably in the next 2 years. I think we've got 15% to run in the next 2 years, no worries, in my opinion. And remember, this is not financial advice, it's just my opinion. So what does all of this mean for me? And how does that play out into my portfolio? So one of the things we do on this channel is we keep a track of my portfolio, or we have been since July. And we started off with about £3 million. We just put that up as a figure. So in August, we had £3,012,000 after a 0.4% growth. In September, we had £3,033,000 after a 0.7% growth. But in October, my portfolio has grown by 1.7%, a huge growth number, which would be £51,562. So it doesn't actually feel real to me to know that my property portfolio I have made in the last month on capital appreciation alone approximately £51,000. Just seems madness. But I'd put it up here. My portfolio currently sits, if I get average returns, at £3,084,646,000. So lots and lots of growth there. I'm really happy with that. Now, what it is doing is all the properties that I'm buying at the moment, and I've got a couple of flats in the pipeline, one that I'm documenting, one that I haven't quite secured. I'm hoping to secure by the end of this week, we'll see. But the other one I have started to document. That one's coming through to completion in the next couple of weeks. I'll be able to talk more about that. But the other thing that I want to do on this video is announce our Dividend subscriber giveaway winner. So Nick, should we reframe this and go over to the laptop and let's announce who's won our final Dividend giveaway. So guys, you meet me over here in the new frame. As you can see, this looks fantastic. Nick, can you get the screen record on? I want to read some of these comments because I don't think this is going to be our last giveaway. I think we're going to reformat it slightly. Let's just get the screen on the thing. So hopefully I'm now in the corner or something like that. But look at these, Nick. Like, tag these videos to the end of your regular videos, says James Brown. Thanks for another good video. Love that you're giving back. Shame to see it go. A new Wagamamas have opened up. Definitely sad to see this content con. Keep going. Genuine investor, great teacher. Perhaps training course should be on the books. No, it's not coming. There's no training course. Yeah, I mean, there's lots of people saying that they would be interested in keeping going. And lots of, so much respect for not pushing courses. There you go, Oliver. Yeah, absolutely. I think what we will do is maybe we'll still do some giveaways, but we'll tag them onto our videos because a few people have sort of said that, and I think that would be a good idea, Nick. So let's do that. Anyway, without dragging this out anymore, let's say we've got £42.40. As we discussed, that's a Wagamama, it's a KFC for £4. You know, you choose how you spend it, but we're going to do a random comment picker. I've already put the comments in, so there's 32 comments, and we're going to start the competition now. Here we go, and our winner is going to be, it's James Belfield. So £39.60, well, it's gone up, James. It's now £42. Treat yourself to a cheeky Nando's with that all day, boys. He's going for the Nando's. I'd go for the Wagamama, but what would you go for, Nick?
Wagamama.
Wagamama too, with a Wagamama man. That's a bit of a mouthful. But guys, I hope you've enjoyed this video. We will continue doing these. James, comment on this video down below. Send me a DM on Insta. Do something to get in contact with me. I'll get the money transferred over to you. But guys, thank you so much for watching. Subscribe if you haven't already, and we'll see you on the next video. Cheers, guys.